Okay, take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the markets, how we analyze the markets. This is Rod from BTA, and we are known as the middle traders. Okay, this is part 2 of our weekly analysis, our update on our weekly analysis for our Bollinger Bands strategy, right? So right here we have a weekly chart of the IWM. And up top we got our Bollinger Bands. Here's our RSI, stochastic, and MACD down below, right? So let's expand this just a little bit so we can see this. All right, so we can see it clearly. And I want to bring it from all the way over here. Okay, now this horizontal yellow line we got going across here is where our pivot point is at, our buy point. Okay, on the Bollinger Band strategy, that was our buy point. Okay, last week we didn't finish up and close above it. Last week we did break above it a couple of times, but the volume was not there. Okay, the volume was not there, so we did not pull the trigger on any of the Bollinger Band strategies for any of the major market index ETFs, right? Well, this week we opened above it, and we actually are still above it on the IWM. Okay, we're still above the pivot point. Look at the RSI. If you notice, here's the 50 level, the dashed line for the RSI. We've been below 50 for quite a while now. This is going back to the beginning of the year. We're still below 50. We traded up to it, couldn't get above it, even in this little move upward here. We're still below it, and now we're below it now. Okay, we can't seem to get above the 50 level. We got to get above the 50 level. That's going to tell us that the buyers, the bulls, are more in control of the momentum. Okay, right now we're not. Right now we're not. I'm saying we because I'd rather be on the bull side. I like a bull market. I don't really like a bear market. I don't care what it really does, but if I had my preference, I would take a bull market because prices can go to the moon, right? But on the downside, you only could go to zero, bankrupt. So right now, the IWM is at $187. Well, only thing it can do is go to zero. So if you were to short it and you bet against it all the way to zero, well, you make $187 a share. But on the upside, it can go to the moon. All right, it might be like Amazon one day, go up to $2,200 and something a share. So there's always more money to be made on the upside. But right now we're looking at the IWM on the weekly chart for our Bollinger Band strategy. It is above the pivot point, and it closed above the pivot point yesterday. Like I said, the RSI is showing us that the momentum is still on the bear side, the sellers. Well, the stochastic is trying to get near its 50 level, telling us that prices are closing higher and higher within the range. Now, this is a good thing for the IWM. You see the MACD, the histogram, these little red lines pointing down, well, they're getting smaller, telling us that maybe, just maybe, this MACD line is going to cross above the blue line, and then we'll start seeing some green lines above price. That's telling us that the momentum is picking up to the upside. Okay, that's called a bullish crossover. If that MACD line, that brown line down here below, this brown line can cross above the blue line. This brown line right here, if it crosses above this blue line, that's called a bullish crossover. That's positive. And then this histogram will start turning green. Okay, that's what we would like to see. And it looks like it's trying to move there. I don't know if it's going to make it because the momentum is low. Okay, and the momentum is starting to decrease. But, well, if we're above the pivot point, then why didn't I take a trade, right? I guess that'll be the question. Well, there's a couple of reasons why. The momentum is slowing and the volume was not there, right? The volume was not there. The volume is very low. But let's look at those moving averages. Okay, let's look at those moving averages, all right? Let's look at those moving averages. Here, this is the weekly chart with our moving averages. Here's that downward trending 8-week moving average that we talk about all the time. All right. But let's expand this a little bit so you can see it. It's easy to see why I didn't want to make the purchase when you're analyzing the charts. Here's the downward trending 8-week moving average. Here's the downward trending 13-week moving average right above head. Okay. But look at this here. 4-week moving average is right below price. It is turning up and it's trying to cross above the downward trending 8-week moving average, right? But we got that overhead resistance right at that 13-week moving average. It's right over the top of our head. Okay, it's right over the top of our head. We have to be careful. Now, let's drop down to the daily chart real quick. Just one time, we're going to drop down to the daily chart. And I'm going to bring over, okay, this daily chart with the key moving averages. You see that downward trending 50-day moving average? You see that downward trending 50-day moving average? The downward trending 50-day moving average right over the top of our head. Okay? We got to be careful. That red line is a downward trending 50-day moving average. It's only right now little less than $2, a little more than $2 above the price action right now. Okay? The volume was not coming in. All right? If you notice, here's the last couple of days. Look at the volume bars for the last couple of days. Today we had a little higher volume, okay, than yesterday, but it's still well below average. So this is the reason why, if you go back and look at the videos we got up, you can see we've been tracking all of the indexes, all of the ETFs very carefully. You see all the reasons why I'm telling you that I didn't want to pull the trigger. Okay, well, let's go back to the weekly chart. Okay, let's go back to the weekly chart. Well, we got that 13-week moving average right above head, the yellow moving average line. All right, and we got that 8-week moving average trending down. So it's, to me, okay, it's better to wait and see if we can get above that 50-day moving average on the daily chart, because we know a downward trending 50-day moving average can be a problem. And a downward trending 13-week moving average, we can definitely go up to that and get rejected and turn around. But the 50-day moving average on the daily chart, okay, is a heavy, very strong overhead resistance level. We can hit that and get rejected. I keep saying it. I don't know how many times I had to say it, but I keep telling y'all, be careful, all right? So right now, the 13-week moving average is only, like I said, it's actually only about $3 some change above price, all right? So we got to be careful. Now, if we start coming back down and breaking below last week's low, that's a major problem. That means we completely broke below the 8-week moving average, and we completely got below the 4-week moving average. The IWM is looking a lot better as far as structurally, because at least we're above the pivot point, okay? We are above the pivot point. We're above the buy point. If we could get that volume to keep coming in, okay, and that volume look better, and we could get above that downward trending 50-day moving average on the daily chart, and this downward trending 13-week moving average on the weekly chart, then that's going to be a really, really positive sign. And then it might be kind of hard for us not to pull the trigger, all right? But now, look at it on the structural level, okay, for our structural chart, showing our trend lines and our horizontal support and resistance levels. Look, you see we had a very strong weekly resistance level right now. Look at these fractals right here. Bing, bing. Look at these fractals, okay? We got a horizontal resistance line, this red line going right across it. You see we couldn't get above it. You see we couldn't get above it for the last 2 weeks. Now, we opened up this week right above it, and we traded down, okay? We opened up this week right above it, and we traded down. All right, today is Tuesday, 1 day of trading. You see why we couldn't pull the trigger, even though we opened up above the pivot point this week? It's a lot you got to look at. You got to keep an eye on everything. If you'd have pulled the trigger yesterday, it would have been not a good thing, okay? Especially when you know, look at the structural chart. So you can't just look at the moving averages. You can't just look at the price action. You can't just look at the volume. You have to look at it all together. All right. This is what I'm trying to show y'all. You have to bring it all together. Look at these long-term resistance levels, okay, on this structural chart here about with our horizontal support and resistance levels and our trend line. Look at this downward trending trend line going across the highs. You see, we traded right to it yesterday, and then it got rejected, and then we broke back below the resistance, okay, which we would rather have to start acting as support, but we broke right back below this long-term resistance level, and look where we at now. If we start riding this here trend line down, look out, okay? Start breaking that 8-week moving average and things of that nature, riding this trend line down on this structural chart, look out. It could be a problem. Look at what we showed you on the Ichimoku cloud yesterday. A storm of brewing, right? So check it out. All right. It's a cloud overhead. This 8-week moving average right below it. The 4-week moving average is turning up right below it. We start breaking below this support level here. Okay. Start breaking back below this, staying below it, and we start staying below this downward trending trend line. It could be a problem for the IWM. If we break back below last week's lows, it's definitely a problem. Okay. So now let's take a look at the weekly chart with the Bollinger Bands of the ITOT. Okay. Here's the ITOT. It's our Bollinger Band up top. Let's expand it so we can see it. We're going to do this one real quick. It's the same thing. All right. We've been looking at on the other major index ETFs. Here's our pivot point, our buy point. We just snapped the horizontal line there. That's our buy point, right? We can't get above it for the last week. This week we're still below it. The momentum on the RSI is below 50. The bears are still in control of the momentum. The sellers are still in control of the momentum. So we had the same thing. Let's switch down to our moving averages real fast and see what we're looking at. Major problem with the ITOT. We can't do anything until we get above this here 100-week moving average. Point blank and period. If we break above the pivot point, which is right here, the high of this day basically, look at this 100-week moving average. Long-term support and resistance level, 100-week moving average. We can't fail at that. So we would never make a purchase just because it broke above the pivot if it can't get above this 100-week moving average. That's a major problem. Then you got the 13-week moving average right above it. This yellow line is right above it. It's only right now about $3 above price. If we break above the 100-week moving average, okay, then it's only $2 above price. The 13-week moving average, that downward trending 13-week moving average, that downward trending 13-week moving average. If we break above the 100-week moving average, okay, which is at 92.89 right now, well, 94.54 it's a 13-week. It's only $2 more. So it's too much overhead resistance right now. Then you got the 30-week moving average right above that, the royal blue line. It is a lot of overhead resistance on the ITOT. Look, this thing got a lot of stuff to get through if it's to go higher. So if we make a purchase, if we do get above the 100-week moving average, we know that downward trending yellow line, which is the 13-week moving average, is key. That's a serious area of interest that we're going to have to watch. Step down real fast to the daily chart. Look at that downward trending 50-day moving average. Right there, that red line is a downward trending 50-day moving average. Okay, this red line here, downward trending 50-day moving average, is right at 94.21. You see that? 94.21. The 100-week moving average is like right around here somewhere. Okay, so if we break right around 92 and some change, right? So if we break above the 100-week moving average on the weekly chart, we coming right up on this 50 downward trending 50-day moving average, and then it also we coming up on that downward trending 13-week moving average. You see the problem here? The 50-day moving average, this red line, is at 94.21. Okay, if we go back to the weekly chart, 94.54 is the 13-week moving average. It's right there together. Okay, we got to be careful. And just for the structural chart real fast, you see it. We ain't got to go over it too long. You see it. It's right there. We got 92.38. Okay. It's a long-term overhead resistance level. We couldn't close above it for the last two weeks. Our pivot point is right here, almost directly on this horizontal red line, which is acting as resistance. We traded above it on Monday, come back below it by the end of the day. By the end of the day, we closed back below it. Hey, can we get above it? 100-week moving average overhead, 50-day moving average overhead horizontal resistance level. Be careful. It's a lot this market has to do to get above these levels. This is not really looking good for the major market indexes. The Bollinger Bands strategy is looking like it's going to have to recycle maybe. We'll see what happens, but it's a lot of work that got to be done for this thing to work. Okay, so look, that's it for the weekly Bollinger Bands, the weekly levels. We know what we got to watch out for. We'll keep an eye on it, and we'll monitor it all week. Okay, see y'all on the next video.